Now, the Institute of Chartered Accountants of India, they have released their revisionary test papers, which are applicable for May 22 examination. Now, here they have provided the case scenario based MCQs, independent MCQs, and the detailed solution is not being provided for the same. And now here we'll be discussing those case scenario based MCQs and the independent MCQs of the taxation. So first of all, the first case scenario is, say, Mr. Subhash is a retailer of car spare parts. Subhash is what? A retailer. He is a retailer of car spare parts, and he has started his business in May 2020. He has started his business in May 2020, and the turnover for the previous year 2021 was rupees 10.5 crores. His turnover for the previous year is what? 10.5 crores. Now here, he generally purchases goods from Car Accessories and Company. What he is doing is, he is purchasing the goods from Car Accessories and Company only. And Car Accessories and Company manufacturers, basically it manufactures and sell spare part directly to customer, as well as through e-commerce platform carparts.com. Now what this Car Accessories and Company is doing, this is Car Accessories. Now they are doing the activity of manufacturing. They are engaged in manufacturing. Okay. And they are supplying the or selling the goods, these car accessories, through directly also. And they are availing the services of e-commerce operator. They are also availing what? Services of e-commerce operator. And that e-commerce operator is what? Carparts.com. For selling their goods, they are availing the services of the e-commerce operator. So when e-commerce operator comes into picture, you must come, 194O comes into scene. And when, you know, this Subhash is there and his turnover is there provided for the preceding financial year, you must know the amendment has been made under section 194Q now. They are required to deduct, say, tax at source. Now, he generally purchases this, Subhash, we have already discussed. Subhash basically purchases goods from Car Accessories and Company only. And Car Accessory and Company manufactures and sells spare parts directly to the customers. They are selling the same directly to whom? The customers. And they are also selling through e-commerce operator. E-commerce operator is what? Carparts.com. Car Accessories and Company's turnover in the previous financial year was 15 crores. So here you must remember that 206C 1H provisions can be attracted. 206C 1H provisions can also be attracted. Now the relevant information on purchases made by Subhash in previous year 21-22 is given here under. Now remember that the provisions which are relating to section 194Q, the provisions which are relating to what? Section 194Q, they have been made applicable from 1st of July. 194Q, the same is applicable from 1st of July 21, and a detailed circular has also been issued in this regard. So relating to 194Q, it has been there with effect from, say, 1st of July 21. Okay. Now under section 194Q, basically what is happening here is the buyer who is responsible for paying to, say, any resident seller for purchase of goods, value or aggregate value exceeding rupees, say, 50 lakhs, he will be required to deduct tax at source at 0.1%. And under 206C1H, the seller is required to collect the tax at source at the rate of 0.1%. And we have both 194Q, okay, and 206C 1H are there, then tax will be deducted at source under 194Q, and 206C 1H provisions are not applicable. And 194O is there, then 194O provisions will be attracted. Then other TDS will not be made under the other provisions. Now, let us see what they are saying further is the relevant information of purchases made by Subhash in previous year 21-22 is given here under. The purchases information has been provided. So the date of, one is the date of credit to the account of car accessories and company. That is 15/5/21. Date of payment to car accessories and company. That is 2/6/21. Date of credit and date of payment. Then value of spare parts has been provided here, 40 lakhs. GST element is there, and total value of spare parts, that is 47 lakh 20,000. Now here on 15/5/21 or say 2/6/21, when the credit is there to the account of the car accessories or payment is made, the provisions of 206C 1H were applicable because the provisions of section 194Q were not in existence at that time. So fundamentally, when TDS provisions are not applicable, then the same will be covered under 1206C 1H. Now, date of amount of credit here is 18/6/21. Date of payment to car and car accessories and company is 36/21. Here also, it is prior to 1st of July 21. Value of spare parts is 15 lakhs. GST rate is 270. GST at rate of 18% is 270. And total value of spare parts and oblique payment is 17 lakh 70,000. Now in this particular case, in 206C1H, a circular has been issued that here the tax will be required to be collected at source by the seller. Tax will be required to be collected at source by the seller, okay, at rate of 0.1% on the amount exceeding rupees 50 lakhs. Now this amount exceeding rupees 50 lakhs will be what if GST element is there. On GST element also, tax will be required to be collected at source. So irrespective whether the GST element is shown separately in the invoice or not. But in relation to what 194Q, a circular has been issued with stating that if GST element is shown separately, then TDS under 194Q for all the all these sections it has been provided that if tax is required to be deducted at source, then tax will not be deducted at source on GST element in case the GST element is shown separately in the invoice. Now this is relating to TCS. Now here, how much amount has been, say, seller is debiting, that is 47 lakh 20,000, that is inclusive of GST, plus 17 lakh 70,000. So total amount inclusive of GST is what? 64 lakh 90,000. In excess of 50 lakh rupees, how much it is in excess of 50 lakh rupees? Here it is 14 lakh 90,000. It is 14 lakh 90,000. So tax will be required to be collected at source at rate of 0.1%. Tax will be required to be collected at source at rate of 0.1%. And in case PAN or say Aadhaar number is not furnished, then the rate of TCS will be 1% in such case. So minus 50 lakhs. In excess of 50 lakhs, tax is required to be collected at source into 0.1%. So the amount of TCS here works out to be 1490. This is the amount of tax which is required to be collected at source by the seller, that is car accessories and company. Then next, the date of credit is on what? Now it is 28/8/21. Date of payment to car and accessories and company 17/8/21. Now remember, relating to what? 194Q, a circular has been issued in this regard, which is stating that we will be computing the value 50 lakh rupees in excess of 50 lakh rupees, whatever buyer is making the payment or crediting the account after say 1/7 21, he will be required to deduct tax at source at rate of 0.1%. So in this particular circumstance, okay, at the time of making payment or crediting the account. Now in this particular circumstance, it has been clarified that whatever, payments or credits have been made from 1st of April 21, that will be aggregated for counting the limit of rupees what? 50 lakhs. So in this particular case, the 50 lakhs turnover has already been achieved. Therefore, now TDS provisions will be attracted because they state that when both 194Q and 206C1H are they applicable, when both the sections are applicable, then TDS provisions will be made applicable, TCS provisions will not be made applicable. Now here, in this case, TDS provisions will be attracted. Now in this case, the buyer basically has made an advance payment on 17th of August. Date of credit is on 28th of August, but he has already effected the payment. So when he has already effected the payment, he would not be able to know the GST amount separately. He won't be able to know the GST amount separately. In such case, what happens is, tax is required to be deducted at source under section 194Q, inclusive of the GST element. Because here, at the time of making the payment, he would not be able to know, because payment has been made in advance, he would not be able to know the GST element. Therefore, on entire 25,37,000 rupees, on entire 25,37,000 rupees, what TDS will be made under section 194Q at rate of 0.1%. Now, in this case, in the next case, 50 lakhs have already cost, therefore TDS provisions are attracted. It's after 1st of July 21. Remember, each and every aspect is important. Here, on 14/2/22, it is there. Date of payment is on 28/2/22. Now here, date of payment is subsequent to date of credit to the account of car and accessories. So therefore, now they will be able to know the GST element. They will be able to know GST element. Therefore, tax is required to be deducted at source excluding GST. Tax is required to be deducted at source under 194Q, under section 194Q, excluding GST at rate of 0.1%. That is on, this will be on 10,50,000 rupees, not on 12,39,000 rupees. If it would have been TCS in that particular case, no GST benefit will be there. On the entire amount, the seller is debiting, tax is required to be collected at source. A circular has been issued in this regard. Then, further information. In addition to above, Mr. Subhash also purchased spare car parts of car accessories and company for 12 lakh rupees inclusive of GST. Now this 12 lakh rupees is inclusive of GST at rate of 18% through carparts.com. As we are already aware of the fact that carparts.com is what? E-commerce operator. Now e-commerce operator will be deducting tax at source. E-commerce operator will be deducting what? Tax at source here under section 194O. So here purchases have been made from carparts.com. Carparts.com is basically an e-commerce operator. Now the payment has been made directly to car accessories and company on 15/1/22. So even if the payment has been made directly, then also the e-commerce operator will be required to deduct tax at source. Okay, at the deduction of tax at source will be there at rate of 1% of the gross amount of sale. Gross amount of sale or service. Now here the GST portion is indicated separately in invoice of car accessories and company, as we have seen, but not shown separately in invoice when the goods are purchased for carpart.com. So carpart.com will be deducting tax at source at the time of making payment of credit, which is earlier, amounting here 12 lakh rupees is the amount. Even if payment is made directly to the supplier, then also tax will be required to be deducted at source at rate of say 1% here, okay, of the gross amount of sale or service. Now they are asking, based on the above facts, choose the most appropriate answer to question number 1 to 5. Is Mr. Subhash required to deduct tax at source? Definitely yes, because TDS provisions under section 194Q has been made applicable with effect from 1st of July 21. The turnover of the buyer in preceding financial year must exceed 10 crores. We have seen if the turnover of the buyer in the preceding financial year exceeds 10 crores, then at a time of credit of the sum to the account of the seller or a time of payment, so whichever the earlier, what will happen? They will be required to deduct tax at source at rate of 0.1%. So then they are asking, if yes, when and at what amount of tax to be deducted? Now here fundamentally, after 1st of July, whatever payments or credits have been made, now the amount of TDS will be 2537, okay, that will be deducted because on 17th of August itself, at the time of payment or credit, which was earlier. And here, in this case, on 14th of February 22, that will be 1050 at rate of 0.1%. So first is yes, 2150 on 17th of August 21 and 1050 on 14th. No, because in this case, since payment is made earlier, as I already told you, since payment is made on particularly on 17/8/21. If this payment is made on 17/8/21, okay, which is what prior to the date of credit, he would not be able to know GST amount. Therefore, the amount of TDS will be on the consolidated amount of payment of 25,37,000 rupees. So it will be 2537. It will be 2537 on 17th of August 21. And then subsequently it will be 1050 on 14 to 22. 1050 on say 14 to 22. Answer will be this in this regard. It will be 500 rupees. No, because TDS provisions have been made with effect from 1st of July. No, Mr. Subhash is not liable to deduct tax at source. That is also wrong. Now, next is car, accessories and companies required to collect tax at source in respect of sale transactions with the Subhash? If yes, when and at what amount the tax is to be collected? Now, 206C1H provisions have already been made applicable. 206C1H provisions have already been effective. Therefore, now here seller at the time of debiting the account or at the time of receipt of payment, which was earlier, will be required to collect tax at source under section 206C1H at rate of 0.1%. Okay, and here this will be the entire amount, including GST. It has been provided in the circular which has been issued. And when 194Q provisions are applicable, when both 194Q and 206C1H are applicable, then what happens? Then in that case, 206C1H will not be applicable. But where 194Q is not applicable for the period prior to 1st of July, then 206C1H provisions will be applicable. So here the answer will be yes. Answer will be yes. But what will be the amount of TCS we have worked out? That is exceeding rupees 50 lakhs. It is 14,90,000 on which tax is required to be collected at source by the seller at rate of 0.1%. Here, including GST amount, tax will be, that 50 lakhs limit will be counted, and over 50 lakh rupees, tax will be collected at source. So answer will be what? It will be 1490. It will be 1490 here at a time of making payment. The tax is what? Debiting the account of the buyer. Basically, it is here under section 206C1H, the tax is required to be collected at source. and that is at the time of receipt of the amount. Basically, it is at the time of receipt of the amount of sale consideration. So it will be on 3621, receipt of amount of the sales consideration. On 3621, yes, on 36,121, that is on one amount of TCS will be what? 1490. So answer in this case will be what? C, okay, because here the transaction has already been fructified where TDS provisions are not applicable. Then next is assume that Mr. Subhash has started the retail business of spare parts in May 21. He has started the business of spare parts in May 21. In such case, would your answer in MCQ 1 and 2 be different? Definitely. In case Subhash start the business, Subhash start business on say May 21. Then in preceding financial year, preceding FY, that is 2021, his turnover is what? Nil. In that case, 194Q provisions are not applicable. Are not applicable. Only 206C 1H provisions will be applicable. So in this case, what the answer will be? Subhash is not required to deduct tax at source. Then the seller, that is a car and whatever car accessories and company will be collecting tax at source under 206C 1H on the entire sales consideration at the time of payment. That it will be collecting tax at source on say 4720. At that time it will not be collected. It will be at 1770, that is what? 1490. Amount of TCS will be what? 1490. Then it will be 2537. And then it will be 1239. 1239. At the time of payment, payment is made on which dates? 3621, 36 at the time of making payment, and 17/8. Then it is 28/2. 28/2. So they say no answer in MCQ 1 and 2 would be same. This is wrong. They say the yes answer in MCQ 1 would change to D, but MCQ 2 will remain same. MCQ 2 will also change. Yes, the answer of MCQ 1 will change to D. MCQ 1 is changing to D. Definitely, what is MCQ 1 answer? D. Subhash is not liable to deduct tax at source. D is correct here. And MCQ 2 they are saying would change to B. Now let us see what B is providing. It is 1490 on 36, then 2537 on 17/8, and 1239 on 28/2. So this is correct. Answer C is correct here. Yes, the answer of MCQ 1 will change to D and MCQ 2 will change to B. Then they are saying yes, the answer of MCQ 1 will change to D and MCQ 2 to A. What is A? No, not 500 rupees. So here, because he does not know, after 50 lakhs only, tax is required to be collected at source. So answer will be C in this regard, 3C here. Then are the provisions of tax deduction and collection at source attracted in respect of transaction with carparts.com? Definitely 194O is there, and provisions will be attracted. Here carpart.com will be liable to deduct tax at source. TDS will be made at rate of 1%. Okay, Carpart is required to deduct tax at source at rate of 1% on 12 lakh rupees. On 12 lakh rupees. Because here GST element is not shown separately. So fundamentally carpart.com is required to deduct tax at source on 12 lakh rupees. So answer will be D in this regard. Subhash is not required to deduct tax at source on 12 lakh rupees because where 194O is applicable, it has been specifically provided, then 194Q will not be applicable. Rate of O is higher than what? The rate of TDS on Q. Therefore, e-commerce operator will be required to deduct tax at source on 12 lakh rupees. So answer will be D. The next is, what they are saying is Mr. Subhash has not furnished his PAN to Car Accessories and Company, but has furnished his Aadhaar number. What is the rate of TCS? So either you can furnish the PAN or you can furnish Aadhaar number. It has been provided here. In that case, TCS rate will not be enhanced to from 0.1% to 1%. Otherwise, TCS rate will be enhanced to what? 1%. So in this case, it will be 0.1% only because he has furnished Aadhaar number instead of PAN. So this was the first case scenario based MCQ which we have discussed here. It's very, very important because they have focused on all the amendments as well as what? The circular which has been issued in this. So you must be very much clear about 194O. You must be very much clear about 194Q and 206C 1S. So it's a very, very important question which they have asked here. And this type of knowledge must be there. Okay. Then sixth question we are discussing here. Ashiana Developers has completed one of its housing projects in January 21. Ashiana projects, this developers, they have completed one of its housing projects in January 21. When developer comes into picture, then the provisions of 43 CA must strike in your mind, which comprises of 10 residential units. It comprises of what? 10 residential units. Now here, it has transferred 9 residential units in February 21 and remaining 1 residential unit in May 21 to Mr. Suraj. 9 residential units have been transferred in February 21 and say 1 residential unit has been transferred to Mr. Suraj, okay, in May 21. So now what it has been provided, all the units were transferred by way of first time allotment. Now listen, all the units, they have been transferred by way of what? First time allotment, and consideration received from Suraj for residential unit is 50 lakh, while the stamp duty value of the unit in May 21 is 57 lakh. 57 lakh is the stamp duty value. Consideration has been received from Mr. Suraj amounting rupees 50 lakhs only. Now in 43 CA what we have seen is, in 43 CA it has been provided that in case if the transfer of residential unit takes, amendment has been made in 43 CA, if a transfer of residential unit is made on say 12th November 20 in this period till 30th day of June 21. During this phase, if transfer takes place because of COVID, this amendment has been made out and transfer is by first time allotment. Here also in picture, it has been first time allotment to a buyer. It is first time allotment to a buyer of the residential unit and consideration does not exceed what? 2 crores. Consideration does not exceed 2 crores. This amendment has been made for this transitional phase from 12/11 to 20 in 43 CA. Instead of what we were deviation to the extent of 10% was allowed. Now here SDV, it can exceed, but it must not be more than what? 120% of the actual consideration. Then in that case, if the SDV does not exceed what? 120% of the actual consideration, in that case we will be taking the actual consideration as the full value of consideration for the purpose of computing profits and gains of the developer. So here the full value of consideration in case of Ashiana developers will be what? 50 lakhs because SDV is what? 57 lakhs. It does not exceed 60. Due to some emergency in family, what happened subsequently? Due to some emergency in family, Mr. Suraj was in urgent need of funds and he sold his residential unit to Mr. Prakash in December 21 for 53 lakhs. Now here, Suraj 50C provisions are applicable. Stamp duty value at the time was 61 lakhs. SDV at that time was what? 61 lakh. Now his consideration is 53 lakhs. Now SDV in this case, now SDV exceeds what? 110% of the consideration. SDV exceeds is greater than what? 110% of the consideration, then in that case, SDV will become what? Full value of consideration for computing the capital gains in hands of Suraj. SDV is the full value of consideration. And next is what? Further they say that he has sold the same. Determine capital gain oblique income chargeable to tax in hands of Mr. Suraj and Prakash. Now in hands of Suraj, full value of consideration is what? 61 lakhs. Cost action will be 50 lakhs. Cost action will be 50 lakhs. So it will be short-term capital gain in hands of Suraj to the tune of 11 lakh. It will be STCG of 11 lakh in hands of Suraj. And in hands of Prakash, as you are aware, Prakash has purchased, provisions of 56(2)(10) will be applicable. That is purchase of immovable property for inadequate consideration. Now the difference exceeds how much consideration has been paid. 61 is the stamp duty value. Consideration paid is what? 53 lakhs. So the difference is what? 8 lakhs. It exceeds 10, if this difference exceeds 10% of the consideration or rupees 50 lakhs, higher of the same. So here the difference is 8 lakh rupees. So this 8 lakh rupees will be chargeable to tax as gift under section 56(2)(10) as income from other sources in hands of the purchaser, that is Mr. Prakash. So the answer will be what? In hands of Suraj, short-term capital gain will be what? 11 lakhs. In hands of Suraj, short-term capital gain is 11 lakhs. This is correct. And in hands of Prakash, 8 lakh will be chargeable to tax as income from other sources. Definitely, the difference between the stamp duty value and the purchase price which he has paid, that is 8 lakh rupees, the same will be chargeable to tax as income from other sources. So the answer is, in hands of Suraj, STCG will be of 11 lakhs, and in hands of Prakash, 8 lakhs will be the income under the head other sources. Next is Suraj 7 lakhs under other sources? No, Suraj is transferring capital asset. In hands of Suraj, STCG 11 lakh, in hands of Prakash nil, that is also wrong. In hands of Suraj 7 lakh as income under the head other sources? No. So in hands of Suraj it is capital gains, and in hands of Prakash it is income from other sources. Next question is what? Mr. Rajesh, aged 53 years. Rajesh, aged 53 years, and his wife, Mrs. Somya, aged 50 years. They are citizens of country X. They are citizens of country X. They are what? Foreign citizens. Foreign citizens. Okay. They are living in country X since birth. Since birth they are living in country X. And they are not liable to tax in country X. They are not liable to tax in country X. These are countries where a person is not required to pay any tax. Both of them have keen interest in Indian culture. They are having what? Keen interest in Indian culture. Mr. Rajesh's parents and grandparents were born in country X. So Rajesh is basically, he is not, his parents and grandparents were also born where? In country X. So basically he is a totally foreign citizen, and Somya is married to Rajesh, you know. Somya visits along with Rajesh for 4 months every year to be with her parents. Somya is visiting India. 4 months means what? Round about, it is 120 days, more than 120 days basically. And his parents were born in Delhi and have always lived in India. Now basically Somya was what? Somya is a person of Indian origin. Rajesh cannot be regarded as person of Indian origin because his parents or grandparents were not born in undivided India. But Somya is regarded as person of Indian origin. And here, during their stay, they organize cultural program in Delhi NCR. Income of Rajesh is 18 lakhs. Somya's income is 16 lakhs respectively. Now they are asking to determine the residential status of Rajesh. So Rajesh basically is not an Indian citizen. He is not a person of Indian origin. He is not an Indian citizen. So basically for him, he will not be deemed resident. He will not be resident but not ordinary resident, because in case of an Indian citizen or a person of Indian origin who comes to India, for purpose of visit to India, who comes to India for purpose of visit to India, if he's in India for more than 120 days, but less than 182 days, and in preceding 4 years, they are in India for 365 days or more, and their Indian income exceeds 15 lakh rupees, then they will be regarded as resident, but not ordinarily resident. That amendment has been made last time. Therefore, for Rajesh will be non-resident. But Soumya, because she is what? A person of Indian origin, she is coming to India for purpose of visit to India. She is coming to India for what? Purpose of visit to India. So, she will be what? Basically, she is visiting India for the purpose of visiting purposes. She is coming and she is satisfying the, conditions. She is in India for 120 days or more during the previous year, but not exceeding 182 days. Besides this, she is having Indian income exceeding 15 lakh rupees. Indian income exceeds rupees 15 lakhs. So, she will be regarded as resident, but not ordinarily resident. But not ordinarily resident in India. So, the answer is what? Rajesh is NR and Soumya is resident but not ordinarily resident. So both are resident in India, that's wrong. Both are non-resident, that is also wrong. Rajesh is resident, no. Rajesh is NR. Soumya is resident but not ordinarily resident, this is correct. And Rajesh is non-resident. And Rajesh is what? Non-resident. Now, let us see question number 8. Now here, what question number 8 is there? Mr. A has taken 2 ULIPs. Unit-linked, ULIP is what? Unit-linked insurance policy. And we have seen, as soon as ULIP comes into picture, an amendment has been made under section 1010D. And what amendment has been made is that now ULIP, which has been issued, say here, they will be regarded as what? A capital asset. In case if the premium, paid in respect of the unit-linked insurance policy exceeds what? Rupees 2,50,000. In case the ULIPs have been issued on or after, this amendment has been carried out in the budget. If ULIP is issued on or after 1st of February 21, it is 1st of February 21. It's on or after, say, 1st of February 21. Immediately they have made the amendment because persons were investing in these ULIPs. High amount of investments were made and the amount which was received from ULIP was exempt. Now they said that this ULIP is what? A capital asset. This is a capital asset. And if you make an investment in one ULIP or more than one ULIP and your amount of this amount which is paid, okay, by way of premium exceeds rupees 2,50,000. In that case, whatever amount is received on maturity of ULIP, the same will be chargeable to tax as capital gains computed in prescribed manner. So here, A has taken 2 ULIPs. ULIP Act is issued on 1/1/21. This ULIP has been issued prior to 1st of February 21. Taxability will not arise under section 1010D. Taxability exemption is there under 1010D. Here, withdrawal of exemption can be made by virtue of proviso in section 1010D. Now, sum assured here is 30 lakh rupees. Then, in this case, ULIP Y, the same has been issued on 1/5/21. Sum assured is 40 lakh rupees. Okay. And annual premium paid by A during previous year 21-22 is 3 lakh and 4 lakh respectively. That doesn't exceed what? 10% of the capital sum assured. ULIP is basically towards life saving as well as investment. Now they are asking what would be the taxability? What would be the taxability of the consideration received by Mr. A on maturity of both the ULIPs? So ULIP X, it will be exempt. ULIP, whatever consideration is received on ULIP Y, it will be taxable. So they say the consideration received on maturity of ULIP X would be exempt under 1010D, while profits and gains from receipt of consideration on maturity of ULIP Y will be what? Taxable. This is correct. Consideration received from maturity proceeds of ULIP, why would be exempt? That is wrong. Consideration received on maturity of both the ULIP would be exempt. That is also wrong. And profits and gains arising from receipt of consideration on maturity of both the ULIPs would be taxable. That is wrong. So the answer will be the A in this regard. So these are what the case scenario and independent MCQs which we have discussed. Now this will be subsequently subjective paper is there. So we have discussed these MCQs and case scenarios because, you know, only answers they have been provided in form of A, B. You must understand how that answer has been arrived. Therefore, we are discussing here the same. And all the amendments, major amendments, have been covered here in these multiple choice questions. So this was all about what the case scenarios and you know, independent MCQs. Besides this, for revisionary, other revisionary test papers and booklet, we have already released those multiple choice questions in our mobile app. You can purchase those multiple choice questions, case scenarios, as well as independent MCQs in our mobile app. bangarsedu.com is the mobile app, which is downloadable freely from Google Play Store. So those MCQs are there. Certain papers have also been made free so that you can practice the same in your mobile itself. So basically, these you can score good marks only when you practice these types of questions. More and more you practice, more and more your confidence will rise. And 30 marks is very, very important. When we see an overall percentage, 30 marks is very, very important. So fundamentally, you should practice all those case scenario based MCQs as well as independent MCQs of ICI. Besides this, we have also provided around about 1500 multiple choice questions for direct, that is income tax portion and GST portion.